Hey everyone, before we get started, just a bit of the boring stuff. The information contained on this podcast is general in nature and does not take into account your personal situation. You should consider whether the information is appropriate to your needs and, where appropriate, seek professional advice from a financial advisor. Now on with the episode.
If you've only been in your job for 3 or 4 months, and you're working in a casual position or something or other, they're going to grill you. They're going to want to see savings records, all kinds of things, because they're not sure about you. But if you've been in the same job for years and years, and you don't have any extravagant expenses or something, or you don't have a menagerie of extras and kids to support, sometimes going to the bank can be beneficial, and it sort of cuts out all the middlemen, and you get a good deal.
Hi, I'm Joe. I bought a house, and despite my experience in real estate, I still had a shitty experience. Apparently I'm not alone, so I've gathered the funniest and realest experts to teach Australia a better way to find their home. Welcome to the No BS Real Estate Podcast. Hello, and thanks for joining us again today on the No BS Real Estate Podcast. Grab that cup of coffee and settle in for this episode where we'll be talking about savings, bank versus mortgage brokers. I'd like to welcome our guest today, the real estate guru, Stef. Stef, thanks for being on the show today. I'm excited to hear your tips and advice, and I'm sure our listeners are feeling the same.
Well, thank you for having me on the show, Joe. It's great to be a part of something that illustrates to real estate newcomers and experienced people the ins and outs and pitfalls. So I'm happy to share some of my experiences. Not sure if I'm quite a guru yet. You're always learning, I feel. But thank you for that moniker. No,
of course, I had to give it to you because you've just in our conversations, I feel like I've learned a lot from you in general. So I feel like our listeners are definitely going to get a lot out of this episode. And as you said, you've been in the property market for a number of years now. You've purchased, you've sold, you've built, bought established, rented out, managed rentals. That's an incredible achievement. If we looked at someone who was about to buy a home for the first time and they're trying to work out their savings and what they can buy, what would be a good savings goal to have? If you don't currently have the savings, or you have some of the funds but you don't really know what you're aiming for, how do you work out what you can borrow or how much you should have?
Well, I guess it's changed quite a bit in the 20 years since I started, because when I started out, it was back in the late 90s, and so deposits then were expected to be around 10%. Then it sort of changed quite a bit. There was a property. Everyone thinks that the latest property spike is a product of our times, but from 2001 to about 2004, there was a huge property bubble, and banks were even offering 0% deposit, and in some cases I remember seeing 105% loans and 110% loans that allowed you not only to borrow for the price of the property, but for the costs of stamp duty and a small renovation. It was ridiculous. But that's how quick prices are increasing. But now you're looking somewhere around about 20% deposit. They've gotten conservative. So I guess you need to look at that 20% deposit, and you need to look at your stamp duty as well. So, let's operate on a $500,000 property, then you need to be having $100,000 in savings. Plus, I believe it'd be about another, say for Victoria or most states, you're looking somewhere between 20 to 30 grand in stamp duty costs, and probably another 2 or 3 grand for conveyancing and bills like rates and all that sort of thing that come with conveyancing. So you're around 135,000, comfortable,
which is very comfortable.
Which is quite a lot of money. Now, there are one way to try and overcome this, because saving up that amount of money is huge. So one way to overcome this would be to look at non-bank lenders. So these outfits like Pepper. Now, Pepper Finance, I've gone through them. They charge a higher rate, but then they're a bit like the pawnbroker of the banking world. They charge a higher rate, but they are a bit more flexible on their terms. So I haven't looked at them in the last 12 months to see what their policies are, but they do tend to allow a lower deposit, but they will charge a little higher rate, and then you can refinance away from them after a few years once your equity's been built up, if you want to go for that lower rate again. But they're quite competitive. I mean, it's not like, we're not talking like 10% or something, it's only 1 or 2% higher than bank rates. So it's a little bit more, but for a bit more convenience, and they'll help you out. And if you look at the economics of things, You know, if the property is rising 10% a year, and you only have to pay 1%, 2% extra for the money in order to purchase it now, you've saved over the few years that it would have taken you to save that extra money that you needed for the deposit. Going for a non-bank lender that charges a bit more but is a bit more flexible in their terms saves you in the long run if you do the math.
Yeah, definitely.
So and that's what I would look at.
The government's doing sort of things like having as low as a 5% deposit, at the moment. And some agencies are accepting, even your 5 to 10% as a deposit and then selling houses that way. That sort of help. That's giving a lot of people a leg up.
Yeah, I believe the state governments are doing that, the federal governments are doing that in various places. So that's definitely one that I would be looking at, is to how to take advantage of that. I've had a work colleague take advantage of there was a saving deposit scheme the federal government had going. I'm not sure if it's still going, where you put $1 into your savings and they put $1 in. So they help boost the savings. And so a colleague of mine at work who was buying his first property managed to save up a deposit using that method. So so I don't know if they're still going, because they keep changing but there's always an incentive. There's always something going on from the government to support first home buyers. So it's well worth looking. And so that's where I'll be looking at is those incentives. And I'd also be talking to a broker rather than a bank. A bank will give you just their products and their policies, and it's usually conservative and very limited. And they can afford to be conservative and limited because we've only got 4 banks in this country. And so they've all got at least, 10 to 20% of the market, and they can live off of that. They don't need to chase the last, skerricks of business in order to keep afloat. Whereas the brokers and the non-bank lenders, they've got to chase everything. They've got to be hungry. So you want to try them, try the brokers, and brokers can find you deals that you never thought of. I was looking at purchasing a property about 5 years ago, and I found a broker on Gumtree of all places. It knocked me back. What had happened was APRA had changed their rules in the process of purchasing or trying to purchase the property. I'd obtained a deposit from, so my main bank had given me a loan of $100,000 against equity of my existing property that I had with them. And that was going to cover my deposit for the property I was trying to purchase. But then APRA changed the rules, and then my bank wouldn't help me out. And so I was ready to purchase this property, and I was already, I hadn't committed to it, but I was very, I was on the edge, and I'm like, how do I rescue this deal? So I thought I'll go to a broker. So I found this broker on Gumtree. I mean, I wouldn't recommend always looking at Gumtree for your brokers, but I was getting a bit, I was sort of Googling, and I just came across it. And I thought, cool, see what happens. And it turned out it was an independent broker who was starting his business, and he was very hungry indeed. And so I gave him all my details and the property and everything, and he found me a deal with a non-bank lender. And he got the deal across the line. And had I not got that property, I would have missed out on all the capital growth and things that I've obtained with it. But he was able to get it for me. So that's my advice: is you do need to look at all avenues. If you're comfortably knowing that you're going to be able to secure a property in your chosen area for 500 and you've got 135 grand in the bank, then go for it. Go to Commonwealth Bank; they'll help you out. But in saying that, there was a recent article in this week, I don't know if you saw it, where a couple in Queensland lost $75,000. And that's a risk, and that's something I've actually nearly had happen through one of the major banks. Again, I'm not going to say which one, but take it from me, they can all do it to you. So I had signed a purchase subject to finance for a property. And so within 2 weeks, I had to come up with the deposit. So I paid the $500, holding deposit. And at the end of the 2 weeks, I had to then come up with the, tens of thousands of dollars, 10% deposit at the time. And the bank just kept dragging their feet. They said, oh, look, give us another week, because the 2 weeks came. They said, give us another week to approve your loan. So I gave them another week. And then at the end of that week came, and they said, oh, give us another week. And then gave them another week. And now we're 2 weeks past the loan, the deposit date. And so now I'm in unconditional territory. I have to purchase this property. I can't get out of it. And so, after 2 weeks past the due date, the bank told me, no, we can't help you out. We're not going to give you the loan. I'm like, why couldn't you have told me this 2 weeks ago? I appreciate you can't give me the loan. I'm not mad at you for that. Your decision's your decision. I mean, I can be unhappy, but you had 2 weeks. I applied the loan with you for this property as soon as I'd signed the contract. I didn't wait a week. And, so they had stung me. So there I was, I'm liable for this property. What do I do? So luckily I had a personal friend who's a lawyer who was able to sort it out, and I only lost the $500 deposit. But he said to me, "You are extremely lucky." He said, "You could have been liable to purchase the house."
Like that article that came out, they lost that $75,000 deposit.
That's right.
That was because the bank wasn't ready to settle, and it's scary to think that that's
exactly. But that brings me to a tip in that a lot of agents will insist you pay a hefty deposit up front, $5,000, $10,000, even 5%, on signing the contract. Don't do it. Just pay the $1,000 or whatever the minimum is, and wait 2 weeks to get your finance across the line. Because if something does happen in those 2 weeks, you potentially lose that deposit. So try and avoid that.
And do you think it's worth going through a financial advisor, or is it something you could do yourself? Just because my experience, like my partner and I, when we started, I had a family member and I was lucky enough to talk to them. They were a financial advisor, and they sort of just gave us, how much savings have you got, and sort of talked us through that situation for free, which was bloody awesome, but not everyone has that opportunity.
No, exactly.
Do you think it would be worth going through some type of financial advisor, or could you do it yourself?
Doing it yourself is harder. I mean, I can do it myself now that I've got years of experience, but when I started out, I didn't know anything, and I definitely didn't know even what a financial advisor could advise me on. But now I know. Financial advisors are valuable in that they can give you a strategy. They're not going to advise you all the pitfalls with the purchase and so forth. I mean, they can, but in a lot of cases, they'll advise you on strategy. So if your strategy is to build a steady income, they may sort of steer you towards flats and units and holiday rentals and that type of thing. If your strategy is to build capital growth, so that's what my strategy is, then they'll steer you towards established properties, commercial properties, that type of thing. So it is valuable, but I've found that probably the most value I've had is speaking to brokers, particularly experienced brokers. I was lucky to meet an experienced broker early on in my property journey, and he gave me a lot of valuable advice. And he was an older gentleman who'd done a lot of investing himself, and so he was able to pass on some of that. And even at the time, so we talk. The media likes to beat up that it's the fault of negative gearing, it's the fault of this, it's the fault of that, that the prices have gone up so much. But 10, 20 years ago, each bank didn't even know what the other bank was loaning you.
Yeah,
so,
true.
You had brokers at the time, and it wasn't my mentor, but it was other brokers who were telling me, who said, just don't put that loan down. Don't tell them you've got that other loan, and this loan this application will be approved. So you could have 5 properties with 5 other lending institutions, go for your 6th, and just tell them, I've got no other loans, sir, and they would believe you on the face of it and give you the extra loan.
Yeah, and
can you believe that? And they've only changed that over the last 3 or 4 years that the new laws came in, where now the banks can see all your loans and all your credits and defaults and so forth.
Obviously, I think you've sort of answered it already. You sort of think that the mortgage brokers are probably better than going directly through a bank unless you've got like a really hefty, solid deposit. But when people are obviously weighing this decision up, they've been with CommBank for 10 years since they were 18, they're just going to go to the bank and get a broker. What do you think your top 2 or 3 pros or cons are of going with a bank and then going with a broker?
I guess the pros of going with a bank, sometimes you can get a better deal because remember, they've got to pay a commission to the broker. So quite often you can get a better deal because you're going straight to the wholesaler in effect. So if you've got a good reputation with the bank, you've got a steady job, you've been working the same job for 4 or 5 years, because the banks look at these things. They're not going to, if you've only been in your job for 3 or 4 months, and you're working in a casual position or something or other, they're going to grill you. They're going to want to see savings records, all kinds of things, because they're not sure about you. But if you've been in the same job for years and years, and you don't have any extravagant expenses or something, or you don't have a menagerie of extras and kids to support, sometimes going to the bank can be beneficial, and it sort of cuts out all the middlemen, and you get a good deal. But remember that banks are only going to give you a good deal to get your business. They're not going to give you a good deal continually, because once you're in there, they've got no reason to continually give you better deals. And so just be mindful of that. So try and get the best deal you can up front, because 6 months, 12 months, 3 years down the track, they'll be touting an even lower rate or even better deals for the new customers. And you'll ring up and say, "Can you do that for me?" "Oh, no, that's only for new customers." And you feel like hard done by. So keep shopping around, keep refinancing is something. So that's probably the biggest pro with the banks is that you do sometimes get a really good deal. The downside or the cons with the banks, many in that they are extremely conservative, and if you are starting out, and quite often you're on the seat of your pants because you're trying to get the best deal you can, you're trying to buy the best property you can for the least deposit, which means you are going to the edge. You 20,000. You are with you got $100,000. You're trying to borrow $500,000. You're not trying to borrow $300,000 because you're trying to get the best property you can for your money. So sometimes the banks will make it so hard that I remember when my first loan was very hard, because back in the late 90s the banks were still much more conservative than they have been in the last 2 decades, and it was almost as if you had to prove you didn't need the loan to get the loan, is how I like to look at it. So that's the problem, that you do have a lot of conservatism, and also banks have got a lot of incompetencies. Banks are big, secure places for employment. They're almost like government, and so it does breed a lot of mediocrity. And so what you tend to have is a lot of people saying, "Yeah, I can do you this loan," or whatever, and then just completely cocking it up and ruining it. And which is what the experience I had with the property that I missed out on because the bank took 4 weeks to approve it instead of just 2 weeks. So there's that. So you do tend to have a lot of stuff-ups like that in banks. And so that's the cons, I suppose. The pros with going with a broker is it opens you up to so many other products on the market. Depending on the broker that you're with, you can be open up to some really odd-sounding non-bank lenders. And when I say odd-sounding, I mean to those in the financial know, it's not odd because they know the market. But to ordinary people who don't sit there and research the 300 plus lenders that are on the market these days, and some of these names you've never heard of. I mean, my current lender, they sound like a software manufacturer. I wouldn't have thought of going to them, but I ended up with them through a broker, and they give me a great deal, and they actually helped me out when no other institution would, because what had happened is because APRA had changed the rules. So I was in this quandary where I had all my loans with a major bank, and they weren't giving me the best rate because I've been with them a few years, and I wanted to refinance, but because APRA had changed the rules, I couldn't refinance because they set the bar much higher. I was stuck with the bank I was with, and my bank wouldn't help me out because I went to them and said, "Can you help me out?" And this is the thing with banks, because as soon as banks are a bit like a long-term employer that's not been valuing your skills. You've been with this employer for 10 years. They haven't given you a promotion. You've seen all these young people come in and they've gotten promotions and you've been left in the lurch. And then one day you go to leave and they're like, "Oh, hang on. No, we were about to look after you. Oh, hang around." And you're like, "Well, it's taken for me to find something else before you've looked after me." Yeah, no. And that's exactly what happened. I finally got onto a lender with the broker. I was signing all the paperwork, and I went to my bank to inform them, and they're like, "Oh, no, we'll look after you. I'm like, "Well, what about the last 3 or 4 years I've been pestering you? Only now you want to look after me." So that's you'll come across that.
That's really interesting, and it's good to know those pros and cons of going with a bank and then a broker. And I remember, like, early in our discussions, we talked about social media when you apply for a loan and how that actually can impact your loan. Have you found this to come into play at all when applying for a loan?
Definitely. Because if you say to a broker or a bank that you've never had dealings with, I mean, if you've got an established relationship with a bank or a non-bank lender, you've been with them for years, and you're just looking to refinance or purchase another or sell and repurchase or whatever, then they're not going to look at your social media. But I have been warned by brokers that they do look at your social media, because if you say you don't have a family in order to try and make your financial situation appear better, they will trawl your social media to see if you're hanging around at children's birthday parties and you've got these photos of your wife, kids, dog, boat, racing car, and all these other things that you haven't cited on your form. You say you don't have any extravagant hobbies, and they've got shots of you in your personal drag car down at called a dragway, that sort of thing. So that they'll try and screen you to check you out. So yeah, it is a thing. It happens.
And even with these days with transaction history as well, that's another one. Like, I know from my own experience, like between me and my mates, we had some really silly titles for transferring money when we went out to dinner and stuff like that. And then when I went for a loan, they said, why are you transferring, who is this person? Turned out to be like my mum. Like, why are you transferring money to this person, and why is she giving you money back? And I'm like, oh, because we shout each other things, and it's my mum. And they're like, is this someone that you need to disclose that you lend money to? And I'm like, no, not at all. Like, it's just a thing.
Oh,
and they said, so they really grilled me on it. And I thought, oh man, I didn't even think that'd be a problem. So I've stopped. I'm like, if I go out for dinner, either just, rather like if I shout everyone, it's like we just put it as very what it is, not something stupid like money for my alcoholism or something like that. So
gee. Yeah, okay.
that's what I mean. Like, stupid titles like that really ruined everything, I found. So they definitely look at bloody everything these days.
Yeah, I tend to use abbreviations when I transfer money, so I'll just put LP for loan payment, things like that. I just abbreviate. I didn't realise that had shielded me from that experience, so that's a good one.
No, that is a good one. Good tip if you ever start trying to be funny, especially when you're younger. Definitely my younger days, I just wouldn't have done any of that. So it didn't make it impossible, but it was definitely questioned. And look, lastly, Stef, there's been so much good info here today, and I know you've given us a lot of advice and things to think about, but for the person out there or the people out there that are about to buy their first principal home, they're about to build their family and move into their first house, what advice do you have for them just for, entering the market?
I suppose try not to. I guess that's a tough one, but I suppose I would look at affordability. Of course, look at the other aspects, like is that home likely to have issues and problems. Look for wavy roofs. I know it sounds weird, but if you tile, because we love tile roofs in most of the country, if you look at the roof and you see it's very, very wavy, it tends to show the house has moved a lot. So do look out for that. But coming back to affordability is find an area where you can comfortably afford. Try and give yourself a bit of a buffer. So, so if you've got $100,000 and you can only purchase a $500,000 property, don't go to the median suburb where it's sitting at $500 exactly, because you're not going to. You've got to go to where you can outcompete. So try and go to where the price might be $450. Or if you are going to that suburb where it is, sort of sitting right on your budget, then you've got to look at the distressed property that we mentioned earlier. And try and find one that does have the photo of the cafe and the park and just a photo of the overview of the top of the property, because that's something you can add value to. You can get in there, make sure it's livable, of course, and most of them tend to be. It's just that people have got so much clutter and stuff. A lot of these properties tend to be deceased estates and that type of thing, and grandma's possessions are all scattered throughout and no one's cleared it out yet. That's why they can't get photos. There's a lot of reasons for why people can't get photos. So I'd concentrate on those properties, because they will be and do concentrate on established properties is probably the greatest advice I can give, because a lot of the value in the property is the land and what you can do with the house itself. By buying a new property in a new estate in a far-flung part of the city, you're doing yourself a disservice, because all the money's been made by the builder. Not you. You're funding the builder. You've given his kids a holiday or whatever. So it's tough on you, because you've got to rely on vehicles. You can't have public transport because there's no public transport, or there's a bus that comes once a day. And there's so much infrastructure that still needs to be built. But by buying in a established area, you tend to overcome all of that because the infrastructure is already there. So look for affordability and try and get yourself an edge on that affordability by looking at the distressed properties. That'd be my advice.
Oh, awesome. Well, Stef, that was awesome advice. Thank you so much for all your insights today. It's been awesome to talk to you and get all your feedback on how to navigate this big decision and what factors come into play as well. So to sum up, Your brokers are going to work really hard for you. Banks tend to be conservative, so just be mindful of how much you're saving. And when you're looking at your savings, a good goal to have is a 30% deposit with a good, decent buffer to help yourselves out when you're going for the loan. So I hope wherever you are in the world, you're staying safe. Thank you for tuning in, and we'll catch you next episode. Now it's time for our weekly contributor, Purple Pingers, with the latest No BS story.
Thanks, Joe. Look, I'm a pretty lazy person, but I do have an apartment. And I remember when I was first looking for a place, I Googled how to buy a house. And it said that the first thing you need is pre-approval for a mortgage. I was like, I don't know what any of these words mean, so I ignored it. And then I decided I'd go to a couple of inspections. The first thing all of the real estate agents asked me when I asked for the contract was, do you have pre-approval for a mortgage? So I was like, I prefer not to answer that question, and then decided probably it's time to speak to a mortgage broker. So I reached out to a friend of a friend who was a mortgage broker, and they asked a lot of questions that I didn't know the answer to. So I then went to CommBank because I bank with CommBank, and they didn't ask me any of those questions. In fact, the guy was like, how much do you spend a week on, this kind of thing? And I was like, I don't know. Can you just put something in? And he was like, yeah, that's fine.
You've been listening to the No BS Real Estate Podcast. Did you know we're building a home buyers community to give Australians a better way to find their humble abode? Sign up now and we'll send your first home buyers checklist straight to your inbox by visiting www.abodi.com.au so you can say buying your home was the easiest thing you've ever done. Thanks for listening.